Stock option trading. Warren Buffett made these two stock options jump. After watching this video until the end, you can know how I profit from long dated options and leap options. Welcome to World Traveling Millionaire Stock Investor and Option Trader channel. Where you are watching from, comment down below. Warren Buffett finally bought Alphabet, Google stock, and this is very exciting news. And he missed out on Google before, and the reason why he bought it, he saw how Alphabet, Google has been doing with AI, right? AI, and he see the value, and he uses it. His company uses Google, and he bought 4.9 billion stake in Alphabet last quarter. Remember, every quarter they release a report, hey, what they bought, right? So it could be already a little bit late. Every quarters mean 3 months. So there are 4 quarters in a year. But Warren Buffett is known to hold stocks for a long time. So I believe he's gonna be holding Alphabet for a long time. And the reason why I have been bullish on Google, right? I bought several leap options, long-dated options, Google. I sold a few of them because Warren Buffett bought it and stock jumped. And hey, I still have some call option, right? Leap option. June 17, 2027, hey, 72.85% profit. After watching this video until the end, you can know how I find great companies and how to choose long-dated options, lead options to profit from stock market. Why I like Alphabet, Google? Because they have a robotaxi like Waymo. Initially, I thought Tesla would be the first one. Now I see so many robotaxi on the street. And Waymo could be the #1 robotaxi in the US. So if I'm bullish on advertising search engine, Google, I use search engine as well. And if most businesses they advertise on Google as well, right? So advertising is a very big market, and plus it's a very low cost business. Now AI, and Google also has quantum computing, so they could be investing in quantum computing as well. Robotaxi, so they're so diversified business. So Warren Buffett, $10 per click regret, right? He missed out on Google. He talked about it in 2017, Berkshire Hathaway annual meeting. I had seen how the product works, and I knew the kind of margin they had. Geico was paying $10 or $11 per click, or something like that. And anytime you're paying somebody 10 or 11 bucks every time someone clicks on a line, well, you have no cost at all, right? It's no cost advertising. Yeah, they might have some labor costs, but once you set up the ecosystem, Google, any advertisers advertising on Google is an additional revenue, and possibly at almost no cost, right? So that's a good business. I knew by the guys that I have plenty of ways to ask questions and educate myself, but I blew it. Right? Warren Buffett speaking about not buying Google Alphabet at the 2017 Berkshire Hathaway annual meeting. So finally, he pulled the trigger. Google stock jumped 19% the past month, and the past 5 days 4.9%. Year to date, 58.19. So it could be one of the best performing stocks in the S&P 500 for this year. And 5 year is 245.15% the past 5 years. Look at this Google stock. Wow, you see, it wasn't moving so much before that. After that, it just goes parabolic. So how to trade lead options or long-dated option? I saw Google stock was not performing well on June 25th, 2025. So I bought this option, lead option, basically 1 year or longer will be lead option. It was only $18.968 at the time. So you multiply with $100 because one call option represents 100 shares. So if you had $1,868 at the time, you could have bought one call options, right? Which is similar to owning 100 shares. Instead of paying 20,000, you just need to pay 1,800. So November 17, in 5 months, is basically 6 times the amount. Look at this, 6 times $18. Now 100, 100. So it's $11,000, right? If you are my patron, congratulations. So this is option number 2. Warren Buffett also made this option jump as well. Option number 1 is 330 strike price. The other time was 190 because at the time Google stock was low, and now I believe Google could reach $330 on June 17, 2027. Google stock is already $300 right now, right? 352 week high, so 330 is very possible. So of course, when I bought it is October 9. October 9, that time it was, if you look at October 9, October 6, 7, 8, 9, it's only 240, so it's a long way. And when I bought this one at the time, June 25th, it was 170. Yeah, I put the strike price out of the money, 190 at the time. So here at the time also out of the money as well. So I like to trade out of the money in great companies. Okay, it's very important. Why? Because if you put out the money, your gain is much bigger than just in the money. A call option, of course, it's also riskier, right? If the stock doesn't reach that strike price at the time, you could be losing money. Your call option will become 0. So I bought on October 9. I sent on alert only $1,973 at the time. Within 5 weeks, 140% gain, more than double, 2.5 times, right? Almost 3 times. So 47.3, $4,730. So typically to trade call option, you could have a few hundreds to a few thousand. Possibly 1,000 to 2,000 will be ideal, but if you want to day trade, stuff like that, your portfolio has to have like 25,000 value so that you can day trade a lot. But I rarely day trade options, usually swing trade. I buy today, possibly sell within 1 week, 2 weeks, or maybe 3 months, 5 months, or it could be 1 year. This is a long dated option, so I could be selling at maybe in 2026 after June, or maybe 2026 after October 9. Because if I sell it after October 9, I just need to pay long-term capital gain, which is lower than short-term capital gain. So this is one good thing about buying long-dated options. How do you choose great companies? Yeah, one of the ways is to see which services are popular, which products are popular. For Google, I use it, it's popular everywhere. It may not be very visible, like Waymo. Nobody's gonna know that, not many people are gonna know that Google owns Waymo, right? But I know about it. But there are some companies that we should not buy, right? Personally, I will not buy. For example, Grab. Yeah, it is very everywhere in Southeast Asia. It's a delivery like Uber. Delivery, you can hire taxi, you can hire motorcycle, motorbike, you can deliver food, order food. Very, very popular and everywhere. But look at the stock price. The past 5 years, it's going down. It's losing money. 60.4. I don't like it. I like stock that beats S&P 500 going up. It's because they are losing money. Very simple. Okay, Google 5 years going up. They are making money, making profits. I prefer to choose companies like this. Buying companies like, if you are a woman, it's like marrying a husband. Will you marry a husband who doesn't make money? No, right? You want to marry a husband who is above average, which means it beats the S&P 500. Plus, it has to have at least 10 years of business. So they know ups and downs of the business cycle. They know how to survive and thrive over the past 10 years. And plus, you need to look at the past 5 years. Hey, has he been hitting the goals, achieving the goals over the past 5 years? His income has it been increasing? Yeah, that could be a husband material. Just like companies, that could be a great company. Plus, do I like this business? Do I understand this business? Yeah, right? Hey, I understand Google. I understand this business. I like this business better than Grab. So that's why I bought Google stocks and also Google call option, and rather than Grab. Financial statement and income statement, balance sheet, very, very important. So Google meet all my criteria. Here Grab, no. So Grab, yeah, if they start profiting, if they have consistent profit for the past 5 years, I may be interested. So not all companies are great. Even though you see them everywhere, it may not be a great company or great investment. Remember, if a company is losing money, I prefer not to touch it. So my strategy to trade long dated and leap options: find a great company and buy a whole long dated course. This one, see, I use blue call spread. So I bought 330 call, I sell 370 call. So that's how I minimize cost. Only $755. Hey, almost double. Of course, you give us some of the gains for the risk that you are minimizing. Because if the stock goes down in the meantime, I don't need to get panic, right? Because this 370 call gonna gain, this 330 gonna lose money. Of course, 330 gonna lose more money than 370, but still, it's better than just buying call 330. I may lose everything. So this is how I minimize cost and how I minimize risk, and I bought several of them, right? So you might say, hey, why don't you just buy 330 one call and don't forget about it? I want to minimize cost and minimize risk. So I rather buy maybe 5 of this call compared to just one call. Okay. If you want to learn more, go to Master Restore Option Crypto, go to playlist, and you can know what I buy, what I profit from the Patreon link down below, and you can also join my mentorship call as well. Share, subscribe. I will see you in the next video. Bye bye.